Let's begin with a nicely popular sentiment. Executives are overpaid. Is this too simplistic?
Not all executives are overpaid. Many executives do a very good job and deserve the pay that they receive. Other executives don't enhance shareholder value, and regardless of that, get the same payments. And I think that is what our survey is pointing towards, is a greater link between executive remuneration and performance.
Are these findings a surprise? Is there anything in these findings that's different from the norm? Or is this to be expected? We've known about this. We've talked about the banks and all that they've been doing to shareholders and their remuneration packages.
Well, it is to be expected. If you look at what the world has gone through in terms of the turmoil in the global economy and the value that has been lost for many shareholders, and the fact that executives in many instances have continued to draw huge salaries, and that no change has been made to this, it's not surprising that sentiment is coming out, and there's a greater uprising for more transparency in what's in executive remuneration.
Yeah, let's talk about some of the key findings here. I mean, there's the issue around the separation of the roles of the chairman and the CEO, which is here in South Africa has been suggested. It's not mandatory, but it is encouraged, I think, particularly amongst the top 40 companies on the JSE.
I think a lot of business owners are calling for that as an essential, and you've made a point that is being achieved, and many of the top 40 companies are. But when you dig deeper into the JSE and some of the Altex companies, unfortunately that's not always the case. And what we'd also like to see are effective chairmen, chairmen that do hold management accountable. So you get the separation of the accountability as well as just the role.
Yeah, but you do need your strong men, don't you? Because you do need a guy who's able to drive strategy and say, own it and drive it and say, actually, this needs to be done because I am the man here. The buck stops right here, as we keep saying.
Exactly, and I think that
at the lower level, though.
Well, in this instance, you actually need the shareholders to be saying that, and the shareholders are the ones that are able to hold management accountable.
So why haven't shareholders been able to hold management accountable in the South African context?
I would suggest that there hasn't been that level of activism that's required at a shareholder level. Many of our public companies are held by institutional investors, large insurance companies, and they have the skills, the capability to question management.
I was going to say that these are not unintelligent people. So what is the problem here? Are these guys just being lazy and we need to get the police after them to make them work harder and try and hold companies accountable? Or is there an issue here around, because I've attended several AGMs, and what you find is that the business of the day is done in 10 minutes sometimes even less. There are very few AGMs where effectively you have a discussion of company strategy and some of the remuneration packages that we see. Of course, we must accept Investec after their AGM a couple of weeks back.
That's what exactly is what is required. You need more involvement, and you need to have a situation where people feel free to go to the AGMs and ask the questions and hold management accountable for the remuneration package. It's so often you go there, it's on the agenda for approval, but it's a matter of merely voting, and so many of our shareholders don't necessarily even attend these meetings. They attend by proxy. And you go there and you have a handful of people around the table. So we do need people to get more involved, and I think as the sentiment becomes stronger, you will find more involvement on behalf of shareholders. Yeah,
I think there's another discussion for another day, because we must certainly get these guys to attend and make the right noises. Let's compare South Africa and the responses that you got against the other BRIC countries as well as the other emerging markets. Is there a surprise here there in terms of the findings?
You actually have a very strong trend between the other BRIC countries and the results in South Africa. In most instances, the percentages for the BRIC countries and South Africa are higher than the global average, which imply that in the more developed markets there is not such a great need for transparency and accountability.
Sure.
However, that in itself is quite surprising if you see what's happening in the US and the UK, and the comments that are being made about high-level director remuneration.
But the surprise is that the business leaders themselves actually do believe that shareholders should actually be actively participating, and the shareholders themselves are not.
I think that there's a little bit of something that needs to be explored in our survey, bearing in mind that we survey privately owned businesses. So where very often you have the shareholder and the director and management are one and the same person. And this is actually a bit of finger pointing towards the public environment, the listed environment, where you have a very separation between your shareholders and your management team. So this is the entrepreneurial, privately owned market pointing fingers at the listed market.
Yeah, I'm certainly going to invite you for a discussion around remuneration and what needs to be done to get that right. Jeanette Hern, partner and of corporate finance at Grant Thornton, South Africa.